Hi, Warriors. Good turnaround Tuesday to everybody. How you doing, Michael and James and Laura? Hi, Ryan, AJ, Galaxy. Morning. So, Ryan, how are you?
Hey Dale, how you doing, mate?
I'm doing okay. So, what are you thinking here, U.S. dollar yen? Does it have enough juice to challenge at 146 level, or was that an important level and we're headed back down towards the lows?
Yeah, it doesn't look like he wants to challenge it at the moment.
Yeah,
Struggling to get back to 144 and hold above 144. So we've got that. We've got a slight downtrend developing, haven't we? Just off that last
yeah,
high. Um,
right.
but
Yeah.
it's we had another dip overnight following the one yesterday, and it got bought up again. Um, so yen bulls aren't having it their own way.
Okay. And yields uh, came back after yesterday's sell-off. Got back down towards the lows. Maybe there's another decline back into this breakout area. A lot of I don't knows for me this
Yeah,
morning. I mean, when it comes to the euro, I'm a seller up here, above this high, and I'm a buyer well under this low. So um, it's you know, and I don't know which one it's going to do first. I almost think that we're going to try and rally this first before that happens. Um,
yeah.
any feeling on euro? They can't break it. They can't rally it.
That's the thing. This is one of those weird ones. You want to sell it at 110 and buy it at 108, 80 odd. But when it does nothing and then it goes there, you think, oh, what's changed that's driven it there?
Yeah,
It's one of this is one of those psychological tests, isn't it? If it suddenly spiked from here to 110, you're going to be going, oh crap, what happened there? But yeah, it's got that feeling when it goes sideways for a long while, it's got to do something thereafter. And
yeah,
if it goes, it's probably going to move through those levels. I hope it doesn't if you're trading it down, but
right. No, I mean,
it's
I want to sell it above here, like 1040, 1050.
gotcha.
And I want to buy it well under this, like, closer to 107.
Yeah,
So, and and this is the range too. Let's call it 880, so 120. Yeah.
yeah,
You could draw a line here, you could draw a line here. It's neutral to me.
yeah,
That's
exactly.
all I could say.
And
Um,
the same for cable.
yeah,
I was looking at cable today on the flow show. It's not often the pound stays in a rough 200 pip range for a long time. Um, so you've got to think that when it does move, it's going to go somewhere. Um, Either that's through 126 and back down to 125 or more, or it's going to go above through 128 and head maybe to 130s.
yeah,
But yeah, it
that's
doesn't.
yeah, that's kind of how it looks. Almost favor um because of this, you could call this one. I was calling this one and then
Yeah.
two, three, but maybe this is one, this is two, and we get a rally like to 29 or so for
Mhm.
three. And same with the dollar. I have this line drawn, down here. So, I'd be a buyer of the dollar here, and I'd be a seller of the dollar way up there. So similar situation. To me, it feels like dollar lower first and then up. Um, but it's probably all going to come down to Thursday. What do you think?
Yeah, it could do. I hope so. Because if we're still in this range after the CPI data, I dread to think what's coming. But you seem to be in the same boat as me. We've got our levels. We just have to sit and wait for them now, and
Yeah, it's hard to do,
it's
but
hard to do because you want to
yeah,
trade. It's the new year, don't you? You want to get stuck into things. You want to get some trades on, and but if you're not hitting your levels, you've got to work on that patience, haven't you?
yeah. I do have an observation on that huge rally we had in risk yesterday,
Yeah.
and it's given a little bit of it back. You see the S&Ps, exceeded 61.8 here, almost got to 78.6, whereas the NASDAQ didn't even get up to 61.8, which is surprising with things like NVIDIA blowing off to new highs and, uh, Microsoft looks like it's trying. Apple recovered quite a bit. But I think there is a possibility that this correction is only half over, that we had this, and now we're going to do something here, put in a lower high, and then get one more of these to the downside to shake it out. And then you could probably buy the world. And that to me would say, should probably be looking for the dollar to rally during that phase.
Yeah.
So, the weakest of all is what people are the most bullish, Ryan. You know how everyone likes the small caps now. So look, IWM, I didn't do the fibs here, but this isn't even halfway back.
Yeah.
Okay.
Probably just about the 38.2, isn't it?
Yeah, I didn't do it, but this is the most interest sensitive group. Okay, so I still think we're going to trade down towards this level or this level in Russell, and then you could probably buy it for the melt up everyone's talking about. But I don't think I'd buy it here. We talked about not being long Russell if there was going to be a pop in rates to like the 4.25 or so, see what happens there.
Yeah.
And I still think that's viable, that we could get that 4.25 here. I mean, the pullback held.
I've got a question for you, if I may.
Sure.
Back on the S&P. After you said yesterday, talking about maybe the S&P will have a down year this year, I had a look at the 12-month chart. I don't know if you can just quickly ping that up. You might need to do a bit of zooming
the
in
month.
when you do it.
Put up the monthly.
12-month. So the yearly.
Oh wow. Okay.
Oh, Ryan, are you going to pull up the Oreo cookie pattern?
So you might need to zoom it in a bit. Just scroll it in.
Okay.
Just do your mouse wheel other way. That's it. And then pull it down a bit so we can all see it. Have a look at those three candles. What do you make of that?
A melt up.
Yeah. That's consensus. If we break that, looking at that, if we break that 4,800 level, it could be a flyer.
I mean, even conservative people now are, I saw something by Katie Stockton, and she says above new highs, we could be looking at 6,100, which was, a David Hunter level, but he's looking for 7,000 now in the first half, by the first half of the year. So
I want to know from Blake, why is it a cookie monster?
Yeah, why?
It's known as the Cookie Monster pattern. Whenever you have the Cookie Monster pattern, the market gets eaten by the Cookie Monster. It's the Oreo cookie pattern. I'm sorry.
Oh, okay. I like that. Yeah. So one is sandwiched within one red candle sandwiched in between two blue candles.
And actually there's a lot I've talked with a few people about this over the years. It's actually a bearish pattern. Now that doesn't mean it's just because the cookie the Oreo filling part, I guess the middle of it should suggest the hesitation. So now that doesn't mean anything. It's not like a pattern that I've seen over and over and over again. Even after 25 years of looking at candles, I still don't look at that and go, oh, that's a reversal. But what I would say is I think I'd have to agree with the people that I've discussed this pattern with, that it does suggest a hesitation. And it's kind of like a good pattern to relate it to, in my opinion, would be something like a hanging man. A hanging man candle is when you close near your highs, but there's a long wick, and hanging man candles can suggest a reversal, but you'd only see that in one yearly candle versus like 3 years of data. But But anyway, I think I think looking at a candle and trying to make much out of the last 3 years, is kind of difficult to do. I think we have to take a step back and talk about, monetary policy and how it's changed and how we're probably going to be faced with some sort of economic slowdown after the Fed has, raised rates at the, highest, the most rapid pace that they have in, since the 70s or 80s or whatever the year we have to go back to. It's interesting though. I was listening to an analyst yesterday, and he was like, well, he's like, if we haven't seen a slowdown now, by now we're not going to see one. And I don't know if I necessarily agree with that. I just I'm just not in that camp yet. So anyway,
okay. When everyone doesn't expect a slowdown, that's when we get a slowdown.
Well, that's this year, right? You could say this last thing, the same thing for last year. Last year, everybody, was looking for a slowdown, and I was too. I was like, hey, man, the economy's got to slow down here. And but every macroeconomist was we're going to have a recession, stocks are going to come down. No one expected stocks to get back to where they're at now. And so now coming into 2024, you have the exact opposite. Everybody is bullish. Everybody.
We have a great interview tomorrow of, an economist, a cycle analyst that I respect is Lakshman at Business Cycle. And he talked hard landing. He talked hard landing all last year.
Yep.
So it's going to be interesting to see if he's changed his tune.
I'm gonna put my money on the fact that that he is not changing his tune.
Yeah.
But if he does, that would be really interesting. My money's on he's not gonna change his tune. So
yeah. Great guest, Dave.
He is a great guest. He's actually one of my favorite people that you bring on, actually.
Oh, you say that about
aside from Ryan.
Oh, well, okay. So now Mark is listening to you, and then you're going to say he's your favorite.
He's second fiddle of this Mark Chandler guy.
All right.
No, Mark is my favorite currency guy around. Like I've been listening to Mark, for I want to say 20 years. Mark Chandler. Jeez.
Yeah.
I think I've been reading his blog since like 2003 or something. 2005, somewhere like that. So no, I have so much respect for Mark Chandler. He's one of those guys that it's always great to hear from him. So you guys make sure you stick around for that interview later today.
He's my favorite guest today.
He's my favorite guest today. There you go.
That's what it's like, right? Yeah.
So hey, since it's just the three of us, and I hear Grega is going to come in. Grega is going to be really, really bearish the dollar. So I don't think we should bring him in today as a guest. Actually, I'd like you to avoid having Gregor Horvat here.
Yeah, let's do it. I can show you some bullish charts.
Yeah. So let me ask this before you and Dale start talking about things. Are you still a dollar bear?
For this year, generally speaking, yes. For the rest of the January, for the rest of the January or for the next few weeks, I think that there is room for 104.50 or so. So this correction that is now underway since end of December is, in my opinion, has more to go.
Okay, well then you can let Greg talk. He can go.
Okay, for this Greg, week. Do you think? All right, Greg, you can take over the charts now, Wizard.
Yeah. Sure.
And good morning, guys. By the way, and great to have you here, Grega.
Yeah. Okay. So, firstly, I want to look at this correlation. At the bottom, we have the S&P 500. So, as you, Dale and Ryan discussed earlier, we have seen some very nice run on the S&P 500 and those indexes, but we are seeing US yields and US dollar still moving sideways. So, in my opinion, this current rally on stocks is not really, is not the real one, in my opinion, because we are not seeing the dollar moving to the downside. So I think that that's only a temporary, still sideways price action, which maybe will resume till we get the inflation reports from the US this week. So I think that still there is a chance that maybe US dollar, as I said, will correct even higher, especially if stocks will now slow down here at this level. So looking at the dollar index, we had a pretty nice 5 waves drop here from that October 2023 highs. We know that that's the bearish pattern. And normally I would expect that this, of course, will resume back to the downside after the rally. And if you look closely, that's a pretty impressive impulsive bounce from that lows. So I think that's the first leg of a correction.
Yeah.
And normally, when you have this free wave movement ongoing, we can retrace all the way back to the wave 4 termination point here at 104.30. So I think that there is room for more upside. Probably there could be even more people, traders, to be sucked into this recovery whenever dollar gets a little bit higher. But ideally, we will see at the same time also stocks then coming even lower. So if I look here at the S&P 500, I still think that that's wave 4 that could be a little bit deeper. I'm looking at 4,600 to be a very interesting support. It's also the 38.2% of this wave 3. So I'm looking for more maybe sideways price action, but still it's consolidation within uptrend. Also, if we look here at seasonality chart, January has been historically, as you know, very nice pullback for stocks, while US dollar, obviously on the opposite side of this, is making a recovery. So maybe we are also now in this period, and if I consider the wave principle and the current price action across different currencies as well, I just think that maybe dollar really has some room for more upside. So if we look here on the euro dollar, also, as you said earlier, Dale, it's a neutral zone, which I agree with. But again, it's a correction within uptrend, obviously. So 107.50 would be ideal support. So if you're maybe more like a swing traders looking for to be in the trade for a few weeks or more, then I think that maybe buying dips here could make sense around 107.50. If you're more like looking for trades to be just in for a day or two or something, then maybe watching for wave B rally here for potential short setup while the market is trading below these highs also could be very interesting setup on the short side. But I'm more leaning towards the bullish calls here. But of course, I want to see some lower prices retested first. Okay, so also if we take a look maybe on Aussie, this one obviously is also turning bullish here when looking at the bigger picture. And last time, Dale, we discussed about the Aussie and potential pullback. I think that we discussed about 65.50 or so, right?
Yeah.
So that's the trend line that could be retested exactly in that area that we discussed. And if we look closely here, I mean, if that was an impulse, which by the way, it's a very strong movement, and now you're a corrective phase, then obviously you can expect that this corrective phase, which normally should be slow price action, is still not completed. So that's why I'm thinking that we have some room for more weakness. Also, if we look maybe on metals, I think that there we have also some room for more weakness. Silver, for example, in my opinion, is targeting the lower side of some very big triangle here. I'm looking for a drop towards $21, $22 while dollar is in a recovery mode, and that's going to be maybe do-die level for bulls, and I would be willing to turn back bullish here on silver if we see a bounce from that area.
Like that.
So also here's the big picture maybe for silver. Let me look at the weekly here. So maybe this one is even better. That's the trend line support of this very big triangle, as I said, around 22. And down there, let's see what happens. If we can stabilize and just return back into this triangle pivot area here around 23.50, then I think that there is more upside potential here.
Nice.
So maybe just last thing, dollar yen. I think that some yen crosses have very different, very interesting potential bearish setups. But looking at dollar yen, I just don't think that we are already trying to complete correction. I think that there is still room for maybe more upside here. So we broke this channel back at the start of December. Maybe now this consolidation will play out till we get more details from Bank of Japan if really they are going to shift the policy here by March or something. Then I think that this dollar yen will obviously impact other yen crosses as well, which in my opinion could see more weakness this year. So
nice.
I will be looking for resistance here on dollar yen around 147 in a few weeks, or maybe already, I don't know.
How about the 10? How about the 10-year yield, or are you looking for maybe a bounce here with the dollar strengthening one more time, like up to 4.25 or so?
I'm looking here still. I mean, I'm looking still for more upside, obviously. But now we are here in a consolidation period, so we'll see how markets will maybe respond here after inflation. After inflation on tomorrow or on Thursday, right?
Thursday, yeah.
Yeah, so there is expectations what are 3.2%. So we will see if we'll get any numbers around that or potentially even higher, who knows. Then obviously this will have an impact on US dollar. And I think that this correction that we are tracking could be even deeper. But it's a correction with an uptrend for sure. So looking for going into 2024, definitely I'm expecting more weakness on US yields, more weakness on US dollar. But as I said, for now, these corrections that are from start of January are incomplete in my opinion.
One of the things that I should probably mention here, since you're talking about yields, Stelios, he did a stealth drop into our chat rooms over the weekend, and he was highlighting how the market is still very, 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 aggressively short the bond market, and how bonds could rally and yields could drop, on just positioning alone. And I thought that was really, really interesting. Did you see that, Ryan? When Stelios popped in over the weekend? I don't know if you saw that. Yeah. So I mean, and that's one thing that I think about as me playing the dollar on the long side, which I am right now. I think about that because I'm cognizant of it. We could see a pretty big squeeze in the bond market at some point. Not saying that it's going to happen today, and yields will come down. Matter of fact, we're going to have we have 3 big auctions coming out over the next couple of days, and I'll take the charts from here. We have 3 big auctions coming out over the next couple of days. We have the 3-year today. I got to go back and grab the numbers. We have like 52 billion today, and tomorrow's like 10-year, and then we have 30-year bonds actually on Thursday. So a lot of big auctions happening this week. So Ryan, do you have any thoughts about, and by the way, Grega, thank you so much for popping in here today.
UK auctions went very well. I saw in Squawk Box there. So the UK bond auctions went very well.
Yeah.
Right, Ryan?
Yeah. We're looking tickety boo over here. The US, it's gonna be an interesting watch. Start of the year, see what the appetite's like. They're still doing a hell of a lot in issuance to plug all those black holes from all the fiscal stuff. So yeah, we things settled down a bit into the latter part of last year. The last few auctions, things settled down. They weren't as market sensitive as the first ones were when we got those low BTCs and whatnot. So yeah, it's going to be interesting. It's always interesting the start of the year to see what appetite is like for notes. Bonds.
Yeah. Hey, I want to, Greg, I want to go back to your you and I have pretty similar views as far as silver goes. The difference that I have, and I've been, we've pretty much looked at this same triangle here, setting up every day for like the last, months,
100 years.
Yeah, it feels like that forever. That's why I've refused to get bullish silver. And Stelios came on here, and he was really, talking very bullish as we were attempting to break out, but then we posted a big false breakout. And that false breakout, you know, every time I see a false breakout like that, I assume we're going to have a breakdown. And I'm not, that doesn't mean it's going to happen. It just means I will not trade it on the long side. It doesn't matter what asset class it is. It's like, if I see a false breakout, I'm not getting on the other side of it. So in this case, false breakout of a very, very strong, you know, trend line, which happens to be symmetrical, pretty symmetrical anyway.
That's
That
nice.
says to me that we are going to eventually break down. Now, again, will it happen? There's more to it than just technical analysis, obviously. You know, and when you start looking at what's happening around the globe, but what that does for me, I won't even play it on the long side here, down at this level. Like if we get to 21 and change, like this would be the 161% extension of just the last bounce, would take us to, you know, 21.20. I wouldn't even get long down there. And that's not saying that that's the right move. I'm just telling you my rules. So false breakouts like that scare the you know, crap out of me.
Not to mention failed breakout on gold.
Yeah, exactly. And then this is the other one. And I'm doing this event over the weekend with like Ashraf Ladi and Boris Schlossberg and, you know, a few other people. Linda Rajki, I can't remember or pronounce her name. Anyway, I'm doing this event over the weekend, and they're like, "Oh, you know, gold's going higher, so we're going to use this tagline." And you know, they're like, "Don't you agree?" And I'm like, "No, I don't. I don't agree, but that's fine. You can run with that. I will tell everybody same thing. I'll tell you right now. I wouldn't want to be short gold because of all the geopolitical risk, but that doesn't mean I want to be long up at these levels either. You know, having exposure to being, you know, owning precious metals, you know, like physical makes sense to me. But like from a trading point of view, with that false breakout that Grega you just mentioned too, and this big, like, let's take a gander at like the long term, you know, view.
Everyone is so bullish gold.
I mean, yeah, everybody's so bullish, and every time we pop into new highs, it gets rejected, and that doesn't mean we're going to get back to 1200. But I wouldn't be chasing it up here. So, you know what I mean? So I mean that, and on top of it, I happen to have a very bullish dollar view, just because I think that the market has really, really mispriced a bunch of rate cuts. And when the market realizes that the Fed's only going to raise rates or cut rates, maybe as a safety cut somewhere down towards the end of 2024, in my opinion, then, you know, we might get one or two rate cuts. Then, you know, you know, the dollar will probably be strengthening as a whole as we move through 2024. That's why I have a very difficult time being long gold. Anyway, there's a few reasons, but anyway, that's it. That I wanted to throw that one out there. But let's talk Turkey today. And today is Dale. I didn't even hear you say this, and I may have been wrong. We had Mutual Fund Monday yesterday, but we have Turnaround Tuesday today. Did you say Turnaround Tuesday?
Yeah, and
you did. Okay.
What I wanted to really show was the relative weakness in what everyone's the most bullish was Russell.
Yeah,
and Nasdaq was weaker, didn't even retrace 61.8, while S&P's got up to almost 78.6.
Yeah, so, like I said, you know, we talked about this last week. I think you short the shit out of the Russell. I mean, if the market comes down, which I believe we're in a long-term range, you know, everybody's all bullish here. I'm very much in the camp that we are in a, here, I'll just draw it out for you. This is how I envision 2024. Like that. That's how I envision 2024. We'll probably find some support somewhere down here. Anyway, if we're going to do this, let's just say we do this in the first half of 2024 in the S&P, what do you think is going to happen with the Russell? Russell's going to get its ass handed to it. We're going to be trading not maybe at the support, maybe even lower. So you know, when you have an underperforming index like the Russell, you have, you know, maybe a resurfacing of banking crisis. You have, you know, all, you know, all the mid cap, companies in the US, I think the Russell is going to get absolutely smashed. And there's a lot of people that
are buy on a pullback to 1820 and then look for new high.
But maybe. I mean,
yeah.
this is a pretty big range. Think it's a pretty big range over the last 2 years, Yeah. So we'll see. I mean, like I said, I wouldn't want to be bullish up here, especially if we saw failure in every other market. I don't think it's going to be what's the word I'm looking for at 6 o'clock in the morning. No, a rotation type of move. When you see if we see the markets pulling back due to, remember, we have bank earnings starting on Friday. We have a lot of big earnings actually coming up on Friday. We have earnings season, and if earnings come in not so hot, we're gonna see some stocks come down, and you're not going to see that rotation that we've been seeing for the last 2 years. So that's my opinion there. But I just realized it's already time, and I feel like I've been.
What, Blake?
It's time for Mr. Mark Chandler.
Oh, okay.
Is he here?
He is. I see his photo, and
he is here.
He's been moved over and everything. So
yeah,
we're ready to go, Mike.
Hey, I want to say, Grega, thanks for being here today. Ryan, I know you're Ryan single-handedly managing the Flow Show at this time. So Ryan, great job over there on the Flow Show. I actually even listened to half of it this morning. So good job.
Thank you.
And Mark Chandler, great to see you.
Good. Thanks a lot.
Yeah, welcome back to F.A.C.E, Mark. Happy New Year to you, buddy.
Happy New Year to everybody. Hopefully this is a year that everybody gets what they want, even if it's not quite what we deserve.
Happy New Year, Mark. I'm going to turn you over to Dale.
I'll toast to that, Mark. So what's top of mind and your narrative for, say, the first few months, first quarter of this year? What are you thinking?
Well, I was listening to the show, and I heard Gregor go over the charts, and I sort of find myself in agreement with him that the dollar had a big sell-off in November and December, and I think it's been a bit exaggerated. I think that the idea that I think that we live in a probabilistic world. And so it's really a question of not if the Fed cuts, but when, how much, what's the probability? And the market seems too confident to me that the Fed's going to cut 5 times, and the market's pricing in 5.5 cuts this year. And I think the market's gotten ahead of itself. And we've seen a small pushback by some Fed officials. I don't see anything the Fed has said that they're going to cut rates in March, for example. And the market's got that largely priced in, call it 70% chance or so. So bottom line here, I'm looking for the market to correct a little bit like it has last year several times, and the market deviates from the Federal Reserve and then ultimately converges back with the Federal Reserve. And that I think as it converges back to the Fed, I think the dollar gets a little bit of a pop here. But for the course of the whole year, kind of interesting. One of the things you guys didn't mention or didn't hear it in the show was this is the beginning of the presidential election year, and there's big cycles that get involved, of course, and typically the stock market does not sell off. I think we've had in the last 17 election cycles, 15 rallies. That is the fourth year of the presidential term. The stock market rallies 15 out of the last 17 cycles. Of those, 2 that missed, the 2 exceptions were, I believe, the financial crisis and 2000. But in any event, the odds favor rallying in the stock market. And I looked at how the dollar index does, and typically the dollar index also rallies historically in the 4th year of a presidential term. However, in the last couple of years, it's been much more, in the last couple of cycles, I should say, it's been more mixed. And so I think the dollar is going to fall this year. But it still has to be proven, of course. And at least in the first part of the year, to your point, Dale, I look for the dollar to trade a little bit better.
All right. So personally, Mark, I think I'm going to have a chance to buy euro around the 107 handle that we're going to take out this recent low and even retest the lows that we had in late December before we had this nice rally in euro. Am
Yeah,
I being too
that's possible.
ambitious?
I think that's reasonable. But for me, though, I mean, and I think that behind that kind of a more bearish view of the euro is that we still aren't getting really good news from Europe. Just today, the Germans reported 7/10 decline in industrial production.
Wow.
I don't think that the German economy, the industrial output, has risen since end of 2022. And so I hear you. I mean, and this is really I think the dilemma that many people have. We are not getting good news from Europe or Japan or China for that matter. But what is happening, I think, is that the divergence we saw where the U.S. economy outperformed so well, say in the middle quarters of last year, I think that outperformance narrows new convergence at lower absolute levels. And this is just to say the U.S. economy slows down before Europe picks up.
Okay, I noticed on this recent sell-off in the dollar before we turned at par 60 that the commodity currencies were outperforming. And, I really like the Aussie if I have a chance to buy it down here at 65.5. Do you have any commentary or fundamentals that could back up my technical view of why commodity currencies may outperform, say, the European currencies, the euro, cable, etc.?
Maybe it's the fundamentalist in me, but I have a problem thinking about the Aussie or Canada as really commodity currencies. And this is what I really love about the foreign exchange market. The average daily turnover, according to the Bank for International Settlements, and you can find this on the internet, and they do a survey every 3 years, it's over $7.5 trillion a day. Global trade in a year is, say, I mean, there's different ways to calculate, but call it world trade in a year, $35–40 trillion. We see that in a week in the foreign exchange market. So to me, when I try to analyze the foreign exchange market, especially for the major currencies, I typically focus on those forces that drive capital. I'm not so interested in goods trade, partly because it's so small compared to the capital markets. So when I think about the Australian dollar, for example, here's why I expect it to also outperform. But it has nothing to do with what happens to commodity prices. Here's what's happened. Australia was slow to cut interest rates. Excuse me, they were slow to raise interest rates post-COVID. And so their overnight interest rate target is about 4.35%, well below most other major countries, leaving aside Japan, of course. And so because they were slow to raise interest rates, they're going to be slow to cut interest rates. And partly we'll see this tomorrow, I think, when they come out with the inflation report, the monthly CPI. So while we're talking about 5 cuts or more from the Federal Reserve, same thing for the Bank of England, more or less, same thing for the ECB, we're talking about 2 rate cuts for the RBA. And so the resilience, so that the interest rate differentials then narrow, favoring Australia as the central bank perhaps a laggard among the majors to cut interest rates this year. Of course, this leaves aside what the Japanese will have to do. But so I'm more favorable to the Aussie, not because of commodity prices, though they might be able to make a case for that. But I'm really more bullish to the Aussie because on the relative monetary policy and the fact that they're likely to cut rates much less than the US, the Eurozone, the UK.
Okay, that's a fundamental to me. Does China come into the equation when you're thinking about Aussie?
I think for a lot of people, sentiment is so important, because my crypto friends are right. There's nothing behind these fiat currencies besides the central banks and the confidence in it. So it's a bit of a confidence game, I think. But so when I think a lot of people think about Australia as sort of the G10 way to express views about China. I don't think it works so well. I remember being on that floor at Chicago Mercantile Exchange around the same time you were, Dale, and I learned that from traders that you have a view, trade the view. I remember sometimes suggesting early in my career buying sterling and selling yen as a bullish way to express oil. Why not just trade oil if that's your view? And so similarly, the currency market, I think if you have a view on China, trade China. Trade as close as you can to what you have your view on. Now, there's too many other sort of moving parts when it comes to the Aussie or the other major currencies as a proxy for China.
Okay. Well, any view on China? I mean, their markets have been under pressure while the rest of the world has been really performing. Well, here you go. Here's FXI making new lows for the year here.
Yeah, I have a small investment in this ETF. Uh, I had thought that other countries tightening policy, China obviously wasn't. I thought the Chinese stock market would do better. I'll tell you what really concerns me about China. It's not so much of it from an investment point of view. I mean, I would say that this idea that is floating around, and partly from U.S. officials, that China is uninvestable, seems to me that they're not talking to the right people. Talk to McDonald's, talk to Starbucks, talk to Kentucky Fried Chicken, talk to Popeyes. And so I think that there are some sectors that are doing well in China and expanding. I mean, very rapidly, faster expansion in China than many other countries. But I think what scares me the most about China, though, is not just that it's an aggressive in the South China Sea, that it's harassing Taiwan ahead of this weekend's elections. Not so surprising. To me, the most surprising thing is their willingness to challenge the Philippines, who the U.S. has a mutual defense agreement with, unlike in Taiwan. So it does disturb me, but I think that behind the scenes, there seems to be this camp. I call it a war camp, though they don't like that term. But these people who are constantly, mostly Americans, some Europeans, no matter what China does, they're critical of China. And that gets our focus away from what's really disrupting about China. And especially its provocative military actions. And it's not just, like I say, it's the Philippines and Taiwan, but they are moving across the border into Bhutan, that small some buffer states like Nepal between India and China. And China is just moving into those territories, villages at a time. And so it does disturb me, but I think that for me, the problem is that if we talk about China, whether how it manages its currency, of course they manage the currency, but I find a strong correlation between the Chinese currency and the general direction of the yen.
Yes, I've seen that.
Yeah. And I think that China, in some ways, that CNH, that offshore RMB, is really a good funding currency. Low volatility, low interest rates, generally softer. And so rather than using the yen where the Japanese could raise interest rates, I think someone said in March, I sort of think it'll happen in April, after the fiscal year ends, after some of the subsidies for energy come off, which boosts inflation, after the wage round. So I'm looking for April timeframe, but why use the Japanese yen, which has become a more volatile currency, as a short leg of carry trades or funding plays? Shorting the CNH and buying a higher yielding or a more volatile asset seems better than using the yen or even the Taiwanese dollar.
Okay, really a lot of great points made on that. You know, I don't know if it has anything to do with it, but all of a sudden at our border, Mark, where it's mainly been Central Americans, there've been something like 30,000 immigrants from China seeking asylum, which is like, 10 times the normal amount this year. And they're saying they're fleeing because of a lack of economic opportunities since COVID. Anything that you see in that? I know it made you chuckle a little bit.
Yeah, no,
why are they running away?
Yeah, it's one of those stories, right? I mean, it's sort of like we did the same thing with the Soviet Union. How many people left the Soviet Union to live in Western Europe or the US compared to the other way around? So I think that's a very powerful voting with our feet. But at the same time, I think that to me the immigration story is a very important story. I think that it's going to be one of the key issues in the U.S. Elections. But we're already seeing it in Europe as well. A real pushback against immigration. This is shifting the political spectrum to the right, and I think it is kind of ironic, right, in a way that many countries have shrinking populations. We have slow population growth in those countries that do have growth whatsoever. And we've got tight labor market. And to me, the two surprising things over the holidays really came from Japan. One is they are selling or going to trade Pershing missiles back to the U.S. so we can give our missiles to the Ukraine, and so we could replenish our stocks. Japan, who is obviously worried about what China is going to do with Taiwan and in the area, they're going to be giving up some of its missiles to the U.S. But separate from that, back to the immigration story, while the rest of the world, Europe, the U.S., are sort of clamping down
demographically
on immigration, Japan is boosting immigration. And this is really a remarkable thing because, for most of our careers, Japan was kind of insular. It was hard for foreign language speaking people to operate in Japan. And that's changing as necessity is driving this. Japan has a shrinking population. They're encouraging foreign workers for the first time that I can remember.
Wow. Okay, that's pretty interesting. Anything else that you really want to cover that's top of mind? I mean, maybe we should talk about this election. Are you looking for, without being political, one of the most chaotic elections, the credibility of the election and people believing in the process with a rerun of what we had 4 years ago? I mean, do you have any feeling of what's really going to go down at this stage? I mean, we're only, 10 months away. That flies. So do you think there's going to be any type of real chaotic type of stuff going on that may make it difficult to have a legitimate election?
I don't know if I question the legitimacy of U.S. elections, but I would note that, the U.S. election late this year, we've got something, almost half the world's population is going to vote this year. So this is really a year of democracy, even if it's a formal democracy. I sort of tease about Japan. Japan's Liberal Democratic Party has dominated Japanese politics for almost as long as the Communist parties ruled China, which is almost as long as the Democratic Party has ruled my home county, Cook County, and Chicago. We're talking about going back to the mid-50s. Democratic parties run Cook County and Chicago. It's the Liberal Democratic Party has run Japan. And of course, we got the Communist Party in China. So, but for the U.S. election, I don't know what to make of it. I mean, I think that generally my sense is that most people feel that neither party, and we do have this two-party system. It's really a duopoly. It's not the multi-party system we've seen in other countries like Europe. But I think most people are dissatisfied with the candidates that are most likely to get both parties' nominations. I don't think that helps the general cause of maintaining the legitimacy of U.S. elections. But I don't think that there's really a doubt in most people's minds that the U.S. election is as fair as elections get. Yes, there's always irregularities, but are they material? And I think that, so for me, what I'm struck by is the continuity on many key issues, leaving aside domestic, tax, and social policy issues. But when it comes to foreign policy issues, when it comes to tariffs, I think that it's hard to tell the difference between from 2016 to 2020, and then from 2020 to 2024. We're seeing tariffs. We're seeing, I think that the American political elite are divided on social issues. We've still got the cultural wars. But when it comes to foreign policy, there's a general agreement. And I think that general agreement recognizes certain countries as enemies. And it's really a question of how we deal with that.
Yeah, bipartisan. It's the only thing that Congress is bipartisan on is having an adversarial relationship with China.
Not just China, but I'd say Iran as well. And I think that when it comes to Russia and Ukraine, I think that it's not just the Republicans that want to slow down the aid or stop the aid to Ukraine. I saw a poll, I think it was conducted by Dow Jones, suggesting that almost half of Americans think we've given too much money to Ukraine. And of course, the EU is blocking too. They have to make decisions unanimously. Hungary is blocking that. But even beyond that, I think that the war between Russia and Ukraine is reaching a point where people are tired, exhausted, including the Ukrainians, not able to have a general draft and get the soldiers that they need. So I think if there was
peace is coming, Mark, peace is coming. just out of necessity, just out of exhaustion?
I don't know about, yeah, for me, maybe a ceasefire of some kind, but I don't know about peace. I don't know if like the borders, I think to me, this is really the big challenge in some ways, is this concept of deterrence has broken down. Russia was not deterred from going to Ukraine, and why should they? They took Crimea with very little repercussions. They invaded Georgia, little repercussions. The Hamas obviously has not respected the deterrence that Israel thought was in place. As I mentioned, China is not respecting the deterrence in East Asia, especially in regards to the Philippines. I think this is part of the crux of the matter is deterrence is broken down and it makes the world a more dangerous and volatile place.
Okay, so you brought it up, so I'm going to bring it up. You brought it up that your Bitcoin friends are right. So I've never heard you talk about Bitcoin. So tell us what you're thinking after this tremendous run. A lot of people say they, down here they believed in the technology. So, and that it was going to be adopted. So we've had this major adoption. Is this $100,000 Bitcoin coming like a lot of people have been talking about for years? And
yeah, I don't know. I'm still skeptical that Bitcoin has a what's the purpose? What's the function? And I can see how you can make the argument that in some countries that don't have a banking system people have confidence in, or hyperinflation, I can see all that, or money, a lot of capital regulations. I could see that as a use case. But in Europe, in the U.S., Europe, Japan, Australia, Canada, I'm not sure that there's really much of a use case for it. And I'm skeptical that it's really money in the way that economists define money. And remember, economists have three definitions of money. It's a means of exchange. And of course, people are not using Bitcoin to buy goods or services in the real economy. They could, it's possible, but it's not happening. And we're not just talking about a new product. We're talking about Bitcoin's been around for almost a decade. Secondly, it should be a store of value. And I'm not sure that it could be really a store of value, though it's rallied like gold has, a non-interest bearing security, non-interest bearing asset can rally when interest rates are falling. When risk appetites are strong, that's what's happening.
So and just another venue for speculation.
I think so. I think so.
Interesting.
And I think to me, that speaks to. I mean, we remember Pet.com.
Yeah, I do.
I remember Pet Rocks. And so I think that to me, the fact that we had higher inflation and we spent a lot of money during COVID doesn't really undermine this case that I've tried writing about, that we live in a world of surplus capital. Our problems from capitalism don't come from the shortages but really from the surpluses. And I think that's really the challenge. We generate too much product. Overcapacity in the industry. We need someplace to put our money, and we create these new asset classes, and it draws in. It's sort of, if that money wasn't going to crypto, where would it be going? Inflating stock prices even higher, inflating real estate prices.
Bonds?
Yeah, I mean, if we're still talking, the Japanese still have negative interest rates, and so. The only way I can conceive of how crypto has done so well when people aren't using it in the real economy is it's a safety valve. The surplus that would have gone to other, perhaps less useful things,
like gold and silver,
desirable. Like gold, silver, other types of speculation. I mean, we've got governments promoting lotteries.
Yeah.
Pure speculation. And so I think the crypto is part of that to me. It's a fascinating experiment to watch, but I still don't see the real use case in the major industrialized economies.
Okay. Your comment on yields and the Fed, we could wrap it with that.
Sure. Yeah, I think it's one of these times the market's gotten a bit ahead of itself on how aggressive the Fed's going to be. I'm looking for the yields to back up a little bit more. I liked what you had said earlier in the show, Dale, about maybe it's 4.20, 4.25 or so on the 10-year yield. I don't think the U.S. economy is falling off a cliff. I think there's some problems with the survey, the jobs numbers, but we'll see this next week. We're going to get another rise in retail sales. We saw a big jump in consumer credit when it was reported yesterday. I think that yes, the U.S. economy is slowing down, but it's not very dramatic or abrupt. I think we're looking at something like 2% here in Q1. Excuse me, Q4 around 2%, maybe something like that in Q1.
You know, there are some respected people that are saying that 5% wasn't it, and that perhaps later in the year we're above 5%. Can you think of could it just be supply that drives it up rather than it being growth? Could it just be supply overwhelming demand that could drive rates up, Mark?
I suppose it could be. I mean, I was thinking back in the big rally we had, say, in the fall, was driven by the new supply projections, and this is the amazing thing. You know, we don't people aren't talking about it so much, but the U.S. budget deficit last year was about 6.2% of GDP, and this is when the economy is growing above trend growth, full employment. These are just huge deficits relative to the underlying economy. This year's budget deficit looked about around 6%. So a lot of supply, but I think that the demand is still there. I think that we see this in the auctions, even if some of the auctions are a bit spotty. Look at this chart you have up there. More than 100 basis point rally in the last, that is a decline, 100 basis point decline in the last 2 months of the year. And so I think that if there's really a crisis about supply, if there really was a worry about the deficit, which reminds me of what Ronald Reagan said, you know, when they asked him, you know, you're cutting taxes, you're increasing spending, what are you going to do about the deficit? Reagan said the deficit was big enough to take care of itself. And I sort of think that the same thing true here is that it's yes, it's a cause of concern, but it's not an urgent, immediate issue. And I don't think it's really the best explanation for the vagaries of the bond market. I think that we've had this the big drop, 100 basis points more. So I think we get a little bit of a bounce. Maybe it's halfway back. That would bring us maybe to 420, 425, something in that area. I am, you know, for the first time in my life, and maybe it's also I'm getting a bit older, I sort of like these long-term interest rates, the rally in rates, and I'm trying to lock in, not just in the U.S., like a J.P. Morgan bond pays a premium over treasuries, but the U.S. is not the only one that issues dollar-denominated bonds. And so I'm looking at other countries, other companies who are issuing dollar-denominated bonds that are good credit risk and that are a premium to the U.S. Treasury.
Okay, and that might even have foreign currency aspect to it.
No, I think that when it comes to trading foreign exchange, I want to really for these kind of long-term investments, I want the dollar-denominated bonds. I don't want to take exchange rate risk. I want it to be a pure yield play, taking the credit risk of, say, a company like Pemex, where the government is giving the government is giving the Pemex dollars to service its debt this year, and so I'm looking for plays like that. Romania's got an interesting dollar bond as well. So you're taking credit risk, but not taking currency risk.
Okay, Mark, you know, I want to thank you for, you know, I don't know how many years you and I have been talking. I think it goes back to the FX Street days, and maybe we waved at each other or had an out trade on the floor. I don't know, but really want to thank you for the years of you contributing to the communities I've been part of, especially here the last 6-7 years, bringing your ideas to the table to edify F.A.C.E and our community. We appreciate you, Mark. So hope you have a great 2024, and we're all fans.
Well, thanks a lot, Dale.
The whole team.
Yeah, no, thank you. I think perhaps it's, you know, I think about my career, and I think it's not, I sort of can empathize more with what Thomas Edison said. He said he didn't fail. He found 10,000 ways it didn't work. And I think that experience and longevity is partly the function, is just we learn from experience, and hopefully we can manage that risk on the downside.
Mark Chandler, everybody. Follow Mark at Mark Making Sense. And your website again, Mark, so that people could keep in touch with you and contact you.
Sure. So I'm fortunate. My employers let me post my commentaries at a website, marktomarket.com, Mark with a C. And I appreciate Dale and ForexAnalytix for reposting the commentary. Of course, it's not it's really trying to participate in the dialogue of the day. So whether it's my website, Mark to Market.
Well, Mark, I want to thank you again, buddy. Happy New Year, and I hope 2024 is your best year in all ways, not just the markets. I think Mark's gone, so I hope everyone enjoyed it, and you could join the team in 15 minutes for the morning edge, everyone. Don't just count your pips, count your blessings, and being able to talk to you guys every day is one. Even though there's some days when that alarm goes off at 4 o'clock, I say, "Oh man, I want to go back to sleep." Anyway, hope everyone enjoyed it. You're welcome, everyone, and see you tomorrow. Good luck on Turnaround Tuesday, and talk to everyone tomorrow. Don't just count your pips, count your blessings. You're welcome, Merle, Ishmael. See everyone tomorrow. Adios.